WatchGuard Capital. Invest your time wisely. Hello, you. This is part 3 of a 5-part series on estate taxes, estate tax return assets, where I review the total assets of 13,429 individual estate tax returns filed in 2016. The purpose of this video is threefold. Number 1, it introduces you to estate tax planning terminology and helps you understand that process better. Number 2, it reviews assets held by our wealthiest citizens so that hopefully someday you can be one of them too. Number 3, it provides information to justify the changes to our estate tax law that I'll be recommending in part 5 of this series. How to fix the estate tax law to align it with addressing our national debt issues, which I am trying to solve. Check out my other videos and subscribe to track my progress. Okay, remember this table from the IRS Statistics of Income data source? It shows aggregate information for all estate tax returns for the 2016 calendar year. Basically, 13,429 people had to file a return. They had $197,094,121,000 in gross estate assets. That number looks like $197 million because all figures are estimates based on a sample. Money amounts are in thousands of dollars. First, I'm deeply concerned that the IRS has to estimate this product by sampling, when the population size is only 13,000 to 14,000 records of information, which in this case are returns. Immediately, I am under the assumption that the IRS needs a capital infusion of cash to modernize and adopt new technology. I am assuming there is a computer out there that should be able to aggregate this information fairly quickly. Second, you are not going to be able to follow along if you are converting each dollar in this table to thousands of dollars in your head, so we will have to fix that. The table includes information on gross estates, assets like personal residence, and a description of that asset. It includes estate tax return deduction information like executor commissions and attorney fees. It includes consolidated adjustments like gift tax paid and deceased spousal unused exclusions that we discussed in part 1 and 2. But this table is ugly. It's hard to read, so we're not going to use this format. We'll use the information, but instead we're going to use this format. Ooh, that's much prettier. It maintains the structure of the information and is segmented by gross estate size. The number of tax returns on the new format is exactly the same from the IRS table. The amount figure on the new format is the same as the IRS table times 1,000 in order to convert it to actual dollars on screen so that you don't have to do that in your head. Some new information that was added is mean income, or the middle American income, assumed to be approximately $60,000, which I arrived at after checking the stated mean incomes by the U.S. Census Bureau, the Bureau of Labor Statistics, and the Federal Reserve Economic Database. The one work lifetime years assumed to be 50 years max, which I arrived at by considering an individual who works from age 18 to age 68, and the standard deduction for income tax returns in 2016, which was $6,300. These numbers will be used to make the data in the below table easier to comprehend. The average estate value is calculated by dividing the amount of assets by the number of tax returns. So in 2016, there were $197.3 billion in assets included in 13,429 estate tax returns, or $14,693,544 on average. There were 9,036 estates between $5.45 and $10 million. The average estate value was $6,569,000. There were 2,836 estates between 10 and 20 million. The average estate value was $13,457,000. There were 1,117 estates between 20 and 50 million. The average estate value was $29,830,000. There were 441 estates with assets over $50 million. The average estate value is $150,726,000. For the percent of returns column, which will make more sense when we are evaluating assets and deductions that are not in every estate, I wanted to quickly be able to tell how many estates used a certain deduction or exemption, and how many Americans died with a particular asset in their possession, like a hedge fund or an art collection. So 9,036 estates had assets in the $5.45 to $10 million range, which is 67.3% of the total 13,429 estate returns that were filed that year. 2,836 estates had assets in the $10 to $20 million range, which is 21.1% of the total 13,429 estate returns that were filed that year. 1,117 estates had assets in the $20 to $50 million range, which is 8.3% of the total 13,429 estate returns that were filed that year. 441 estates had assets above $50 million, which is 3.3% of the total 13,429 estate returns that were filed that year. For the percent of total value column, which will also make more sense when we're evaluating assets and deductions that are not in every state, I I wanted to quickly be able to tell how large a particular asset or deduction was to know how impactful it was at the aggregate or big picture level. So 67% of the returns had 30% of the total assets. 21% of the returns had 19% of the total assets. 8% of the returns had 16% of the total assets, and 3% of the returns had 33% of the total assets. Years of income is found by dividing the amount of total assets by the assumed mean income, in this case $60,000. This is how many years of income are being transferred, which is meant to help you better understand these dollar amounts. 197 billion is equal to 3,288,660 years of $60,000 income. The average years of income is similar, but it's found by taking the average estate value for individuals and dividing it by the assumed mean income of $60,000. So in this case, the average estate of $14.69 million is transferring 244.9 years of income at $60,000 a year. The smaller estates around $6.5 million are transferring 109.5 years of income at $60,000 a year, and the larger estates around $150 million are transferring 2,512.1 years of income at $60,000 a year. Okay, so I'll show this table now that you know how to read it while I'm reading the IRS description of the asset or deduction, but we'll not be using it during the review because as pretty as it is, a different visual will work better. So we'll use this instead. Each one of these icons equals $60,000, the approximate median income for an American in 2016. Each of these groups equal 100 years of $60,000 incomes, or two 50-year lifetimes of work, earning non-inflation adjusted $60,000 incomes, or $6 million. Gross estate for tax purposes. For estate tax purposes, the gross estate includes all property or interest in property before reduction by mortgages, administrative expenses, and debts, except policy loans against insurance. If the median income of an American is $60,000, the average estate for the 13,429 Americans who died in 2016 transferred 245 years of income to heirs. 9,036 estates transferred 110 years of income to heirs. 2,836 estates transferred 224 years of income to heirs. 1,117 estates transferred 497 years of income to heirs, and 441 estates transferred 2,512 years of income to heirs. Per the IRS, personal residence. This asset category includes the home identified as the decedent's residence. At most, one item of residential real estate per return is included in this asset category. 69.3% of estate returns listed a personal residence as an asset. The total value of those 9,309 personal residents was $10.6 billion, 5.4% of the total $197 billion of total estate assets. If the median income of an American was $60,000, the average estate for 9,309 Americans who died transferred 19 years' worth of income to heirs through personal residences, or about $1.1 million. 6,041 estates transferred 14 years of income to heirs through personal residences, or about $828,000. 2,084 estates transferred 22 years of income to heirs through personal residences, or about $1.3 million. 831 estates transferred 34 years of income to heirs through personal residences, or about $2 million. And 354 estates transferred 58 years of income to heirs through personal residences, or about $3.4 million. 73.5% of estate tax returns listed other real estate as an asset. The total value of other real estate on those 9,874 returns was $18.6 billion. Other real estate is 9.4% of the total assets listed in estate tax returns. Per the IRS, other real estate. This asset category includes commercial property, undeveloped land, real estate mutual funds, REITs, and residential property other than personal residence. I find it interesting that there were more estate tax returns with other real estate than with personal residence, and that the value of other real estate was almost double the value of personal residences. If the median income of an American was $60,000 in 2016, the average estate of those 9,874 Americans who died with other real estate in their possession transferred 31 years' worth of income to heirs through this asset category, or about $1.8 million each. 6,383 estates transferred 18 years of income to heirs through other real estate, or about $1 million. 2,204 estates transferred 32 years of income to heirs through other real estate, or about $1.9 million. 911 estates transferred 55 years of income to heirs through other real estate, or about $3.2 million. And 377 estates transferred 196 years of income to heirs through other real estate, or about $11.7 million. Only 19.9% of estate tax returns listed real estate partnerships as an asset. The total value of real estate partnerships on those 2,666 returns was $10.5 billion. Real estate partnerships accounted for 5.4% of the total estate assets listed. The average value transferred was $3.9 million per estate, about 4 times the average value of primary residence and about 2 times the average value of other real estate assets. Per the IRS, real estate partnerships. This asset category includes general partnerships whose main function is the ownership of real estate assets. Limited partnerships focused on real estate ownership are included in the other limited partnerships asset category. If the median income of an American was $60,000 in 2016, the average estate for those 2,666 Americans who died with real estate partnerships in their possession transferred 66 years' worth of income to heirs through this asset category, or about $3.9 million each. 1,376 estates transferred 25 years of income to heirs through real estate partnerships, or about $1.5 million. 693 estates transferred 40 years of income to heirs through real estate partnerships, or about $2.4 million. 395 estates transferred 87 years of income to heirs through real estate partnerships, or about $5.2 million. And 202 estates transferred 394 years of income to heirs through real estate partnerships, or about $23.6 million. Thus, the 3 main asset categories for real estate, personal residence at 5.4%, other real estate at 9.4%, and real estate partnerships at 5.4%, which did not include limited partnerships, totaled 20.2% of total assets declared on 2016 estate tax returns. 26.3% of estate tax returns listed closely held stock as an asset. The total value of closely held stock on those 3,533 returns was $18.9 billion. Closely held stock accounted for 9.6% of the total estate assets listed. The average value transferred was $5.3 million per estate. Per the IRS. Closely held stock. This asset category includes the total value of stock held in closely held corporations. Closely held corporations are those whose ownership is concentrated among a relatively small number of owners and whose stock is not traded publicly. If the median income of an American was $60,000 in 2016, the average estate of those 3,533 Americans who died with closely held stock in their possession transferred 90 years' worth of income to heirs through this asset category, or about $5.3 million each. 1,945 estates transferred 22 years of income to heirs through closely held stock, or about $1.3 million each. 853 estates transferred 40 years of income to heirs through closely held stock, or about $2.3 million each. 485 estates transferred 94 years of income to heirs through closely held stock, or about $5.6 million each. And 250 estates transferred 773 years of income to heirs through closely held stock, or about $46.3 million each. 82.1% of estate tax returns listed publicly traded stocks as an asset, the most widely held asset so far. The total value of publicly traded stocks on those 11,029 returns was $45.6 billion. Publicly traded stock accounted for 23.1% of the total estate assets listed. The average value transferred was $4.1 million per estate. Per the IRS, publicly traded stock. This asset category includes publicly traded shares issued by domestic corporations and foreign businesses, including American depository receipts and mutual funds that are solely or primarily composed of these shares. If the median income of an American was $60,000 in 2016, the average estate for those 11,029 Americans who died with publicly traded stock in their possession transferred 69 years' worth of income to heirs through this asset category, or about $4.1 million each. 7,257 estates transferred 30 years of income to heirs through publicly traded stock, or about $1.8 million each. 2,380 estates transferred 67 years of income to heirs through publicly traded stock, or about $4 million each. 994 estates transferred 142 years of income to heirs through publicly traded stock, or about $8.5 million each. And 398 estates transferred 600 years of income to heirs through publicly traded stock, or about $36 million each. Thus, the two main categories for stocks, closely held stock at 9.6% and publicly traded stock at 23.1%, totaled 32.7% of the total assets declared on 2016 estate tax returns. State and local bonds. Per the IRS, this asset category includes debt securities issued by state and local municipalities, such as general obligation bonds, revenue bonds, and municipal notes. Interest income from these bonds are often exempt from federal and state income taxes. 55.5% of estate tax returns listed state and local bonds as an asset with a total value of $15,759,050,000. State and local bonds accounted for 8% of the total estate assets listed in 2016. If the median income of American was $60,000 in 2016, the average estate of those 7,447 estates who died with state and local bonds in their possession transferred 35 years' worth of income to heirs through this asset category, or about $2.1 million each. 4,775 estates transferred 16 years of income to heirs through state and local bonds, or about $997,000 each. 1,691 estates transferred 34 years of income to heirs through state and local bonds, or about $2 million each. 710 estates transferred 81 years of income to heirs through state and local bonds, or about $4.8 million each. 272 estates transferred 250 years of income to heirs through state and local bonds, or about $15 million each. 24.3% of estate tax returns listed federal bonds as an asset. The total value of federal bonds on those 3,260 returns was $2,486,480,000. Federal bonds accounted for 1.3% of the total assets listed, the lowest total so far. The average value transferred was $762,000 per estate. It does not appear that federal bonds are a material holding for ultra-wealth growth, which is disappointing because it's what Social Security, Medicare, the Military Pension Fund, and all other government trusts, for that matter, invest all of their funds in. Per the IRS, federal bonds. This asset category includes all debt securities issued by the U.S. Department of the Treasury. This includes savings bonds, as well as notes, bills, and bonds issued by the U.S. government chartered enterprises such as Fannie Mae and Freddie Mac. Also includes mutual funds that are solely or primarily composed of these bonds. If the median income of an American was $60,000 in 2016, the average estate of those 3,260 Americans who died with federal bonds in their possession transferred 13 years' worth of income to heirs through this asset category, or about $762,000 each. 2,073 estates transferred 4 years of income to heirs through federal bonds, or about $224,000 each. 720 estates transferred 7 years of income to heirs through federal bonds, or about $431,000 each. 322 estates transferred 15 years of income to heirs through federal bonds, or about $905,000 each. And 137 estates transferred 172 years of income to heirs through federal bonds, or about $10.3 million each. 37% of estate tax returns listed corporate and foreign bonds as an asset. The total value of corporate and foreign bonds on those 4,974 returns was $2,631,835,000. Corporate and foreign bonds accounted for 1.3% of the total estate assets listed, which tied with federal bonds. An average of 529,118 of corporate and foreign bonds were in each estate that held them. Per the IRS, corporate and foreign bonds. This asset category includes debt securities issued by businesses and all bonds issued by foreign governments. Also includes mutual funds that are solely or primarily composed of these bonds. If the median income of an American was $60,000 in 2016, the average estate of those 4,974 Americans who died with corporate and foreign bonds in their possession transferred 9 years' worth of income to heirs through this asset category, or about $529,000 each. 3,106 estates transferred 4 years of income to heirs through corporate and foreign bonds, or about $241,000 each. 1,146 estates transferred 7 years of income to heirs through corporate and foreign bonds, or about $451,000 each. 506 estates transferred 15 years of income to heirs through corporate and foreign bonds, or about $890,000 each. And 216 estates transferred 70 years of income to heirs through corporate and foreign bonds, or about $4.2 million each. 22.3% of estate tax returns listed bond funds as an asset. The total value of bond funds was $1,215,912,000. Bond funds accounted for 0.6% of the total estate assets listed, the lowest so far. Per the IRS, bond funds. This asset category includes mutual funds composed of a variety of different types of bonds. Also includes mutual funds that could be identified as being composed of bonds, but for which a primary bond type could not be determined. If the median income of an American was $60,000 in 2016, the average estate of those 2,997 Americans who died with bond funds in their possession transferred 7 years' worth of income to heirs through this asset category, or about $405,000 each. 1,914 estates transferred 3 years of income to heirs through bond funds, or about $168,000 each. 676 estates transferred 4 years of income to heirs through bond funds, or about $246,000 each. 296 estates transferred 12 years of income to heirs through bond funds, or about $699,000 each. 110 estates transferred 79 years of income to heirs through bond funds, or about $4.7 million each. Mortgages and notes. Per the IRS, this asset category includes money owed to the decedent through arrangements such as personal loans made to a business or other individual, also includes claims, settlements, and judgments owed to the decedent. 30.7% of estate tax returns listed mortgages and notes as an asset with a total value of $7,471,878,000. Mortgages and notes accounted for 3.8% of the total estate assets listed. If the median income of an American was $60,000 in 2016, the average estate of those 4,118 estates who died with mortgages and notes in their possession transferred 30 years' worth of income to heirs through this asset category, or about $1.8 million each. 2,341 estates transferred 9 years of income to heirs through mortgages and notes, or about $539,000 each. 957 estates transferred 19 years of income to heirs through mortgages and notes, or about $1.1 million each. 540 estates transferred 41 years of income to heirs through mortgages and notes, or about $2.4 million each. And 280 estates transferred 225 years of income to heirs through mortgages and notes, or about $13.5 million each. Thus, the 5 main categories for debt assets: state and local bonds at 8%, federal bonds at 1.3%, corporate and foreign bonds at 1.3%, bond funds at 0.6%, and mortgages and notes at 3.8%, totaled 15% of total estate assets declared on 2016 estate tax returns. 28.1% of estate tax returns listed unclassifiable mutual funds as an asset. The total value of unclassifiable mutual funds was $1,169,625,000. Unclassifiable mutual funds accounted for 0.6% of the total estate assets listed, tied with the lowest so far. Unclassified mutual funds. This asset category includes mutual funds that are broadly composed of a variety of assets, including stocks, bonds, and cash assets. Also includes mutual funds whose asset composition could not be determined. If the median income of an American was $60,000 in 2016, the average estate of those 3,774 Americans who died with unclassifiable mutual funds in their possession transferred 5 years' worth of income to heirs through this asset category, or about $309,000. 2,487 estates transferred 3 years of income to heirs through unclassifiable mutual funds, or about $197,000 each. 824 estates transferred 6 years of income to heirs through unclassifiable mutual funds, or about $340,000 each. 337 estates transferred 8 years of income to heirs through unclassifiable mutual funds, or about $491,000 each. And 126 estates transferred 31 years of income to heirs through unclassifiable mutual funds, or about $1.8 million each. Unallocated investments. Per the IRS, this asset category includes investments in financial assets that could not be allocated in a specific category. 13% of estate tax returns listed unallocated investments as an asset, and the total value of all unallocated investments was $1,623,177,000. Unallocated investments accounted for 0.8% of the total estate assets listed. If the median income of an American was $60,000 in 2016, the average estate of those 1,750 estates who died with unallocated investments in their possession transferred 15 years' worth of income to heirs through this asset category, or about $927,000 each. 1,200 estates transferred 9 years of income to heirs through unallocated investments, or about $576,000 each. 369 estates transferred 16 years of income to heirs through unallocated investments, or about $940,000 each. 125 estates transferred 27 years of income to heirs through unallocated investments, or about $1.6 million each. And 57 estates transferred 112 years of income to heirs through unallocated investments, or about $6.7 million each. Other assets. Per the IRS, this asset category includes items that cannot be assigned to one of the other asset categories, such as precious metals and household or personal items like furniture, clothing, jewelry, and automobiles. 88.7% of estate tax returns listed other assets as an asset, and the total value of other assets was $3,075,255,000. Other assets accounted for 1.6% of the total estate assets listed, or $258,143 per estate on average. I think it's important to note that the idea that an estate exemption has to be $5.45 million per individual or $10.9 million with portability for couples in 2016 and $11.7 million per individual, $23.4 million with portability for couples in 2021 to protect family heirlooms is easily dismissed with this category. Other real estate assets were approximately 6 times greater, publicly traded stock assets approximately 15 times greater, bonds and note assets approximately 10 times greater, and cash assets approximately 5 times greater than this other asset category. And all these asset categories were included in estate tax returns about as commonly as this other asset category, which would include family heirlooms. So I think the real trade-off an executor has to make if the estate exemption was more in line with historic levels is whether to sell off some non-family home property, some stocks, some bonds, or use some of the cash already in the estate to pay taxes, not deciding whether to sell the silver set or wedding ring that has been in the family for over 100 years. If the median income of an American was $60,000 in 2016, the average estate of those 11,913 estates who died with other assets in their possession transferred 40 years of income to heirs through this asset category, or about $258,000 each. 7,821 estates transferred 2 years of income to heirs through other assets, or about $104,000 each. 2,608 estates transferred 3 years of income to heirs through other assets, or about $179,000 each. 1,053 estates transferred 8 years of income to heirs through other assets, or about $464,000 each. And 432 estates transferred 50 years of income to heirs through other assets, or about $3 million each. Thus, the three main catch-all categories, unclassifiable mutual funds at 0.6%, unallocated investments at 0.8%, and other assets at 1.6%, totaled 3% of total gross estate assets declared on 2016 estate tax returns. Cash assets, per the IRS. This asset category includes all liquid assets such as actual cash, bank accounts, certificates of deposits or CDs, money market accounts such as money market deposit accounts and money market mutual funds, and call and sweep accounts held in a brokerage. 98.5% of estate tax returns listed cash assets as an asset, the highest so far, and just shy of 100%. The total value of cash assets was $15,998,758,000. Cash assets accounted for 8.1% of the total estate assets listed, or $1,209,553 per estate on average. If the median income of an American was $60,000 in 2016, the average estate of those 13,220 estates who died with cash assets in their possession transferred 20 years of income to heirs through this asset category, or about $1.2 million each. 8,883 estates transferred 10 years of income to heirs through cash assets, or about $638,000 each. 2,802 estates transferred 21 years of income to heirs through cash assets, or about $1.2 million each. 1,105 estates transferred 39 years of income to heirs through cash assets, or about $2.3 million each. And 438 estates transferred 159 years of income to heirs through cash assets, or about $9.5 million each. Net life insurance, per the IRS. This asset category includes the value of includable life insurance net of policy loans. Includable insurance is any insurance on the decedent's life that is payable to the estate at the decedent's death, or is payable to another beneficiary if the decedent retains some ownership of the policy. 41.2% of estate tax returns listed net life insurance as an asset. The total value of net life insurance on all 5,537 returns was $3,003,901,000. Net life insurance accounted for 1.5% of the total estate assets listed, or $542,000 per estate on average. Two things about net life insurance. First, I rarely approve of purchasing whole life insurance, as I feel you are purchasing expensive insurance and poor investment returns. Second, it's okay not to have life insurance at some point if your assets have grown and you are effectively self-insuring your estate with those assets. If the median income of an American was $60,000 in 2016, the average estate of those 5,537 estates who died with net life insurance in their estates transferred 9 years of income to heirs through this asset category, or about $542,000 each. 3,691 estates transferred 7 years of income to heirs through net life insurance, or about $403,000 each. 1,177 estates transferred 11 years of income to heirs through net life insurance, or about $660,000 each. 486 estates transferred 14 years of income to heirs through net life insurance, or about $827,000 each. And 183 estates transferred 30 years of income to heirs through net life insurance, or about $1.8 million each. Retirement assets. Per the IRS, This asset category includes annuities, assets held in defined contribution plans, such as individual retirement accounts or IRAs and 401ks, and the taxable portion of survivor benefits from defined benefit plans, such as traditional employer pensions. 68.3% of estate tax returns listed retirement assets as an asset, and the total value of retirement assets was $11,887,801,000. Retirement assets accounted for 6% of the total estate assets listed, or $1.2 million per estate on average. If the median income of an American was $60,000 in 2016, the average estate of those 9,167 estates who died with the retirement assets in their possession transferred 22 years of income to heirs through this asset category, or about $1.2 million each. 6,286 estates transferred 18 years of income to heirs through retirement assets, or about $1 million each. 1,892 estates transferred 25 years of income to heirs through retirement assets, or about $1.5 million each. 718 estates transferred 32 years of income to heirs through retirement assets, or $1.9 million each. And 270 estates transferred 54 years of income to heirs through retirement assets, or about $3.2 million each. Thus, the three main categories of assets typically used to cover the living expenses of surviving spouses or children, cash at 8.1%, net life insurance at 1.5%, and retirement assets at 6%, totaled 15.6% of the total gross estate assets declared on 2016 tax returns. Private equity and hedge funds. Per the IRS, this asset category includes both private equity funds and hedge funds. Usually structured as limited partnerships, these private investment funds are typically open to a limited range of professional and wealthy investors and pay performance fees to their investment managers. 9.7% of estate tax returns listed private equity and hedge funds as an asset, with a total value of $2,955,384,000. Private equity and hedge funds accounted for 1.5% of the total estate assets listed, or $2.2 million on average per estate. If the median income of an American was $60,000 in 2016, the average estate of those 1,300 estates who died with private equity and hedge funds in their possession transferred 38 years of income to heirs through this asset category, or $2.2 million each. 590 estates transferred 6 years of income to heirs through private equity and hedge funds, or about $340,000 each. 318 estates transferred 13 years of income to heirs through private equity and hedge funds, or about $776,000 each. 235 estates transferred 30 years of income to heirs through private equity and hedge funds, or about $1.7 million each. And 157 estates transferred 221 years of income to heirs through private equity and hedge funds, or about $13.2 million each. Other limited partnerships. Per the IRS, this asset category includes the value of all limited partnerships except private equity and hedge funds, which are included in the private equity and hedge funds asset category, and those organized as farms, which are included in the farm assets category. 28% of estate tax returns listed other limited partnerships as an asset, with a total value of $7,241,219,000. Other limited partnerships accounted for 3.7% of total estate assets listed, or $1,924,321 on average per estate. If the median income of an American was $60,000 in 2016, the average estate of those 3,763 estates who died with other limited partnerships in their possession transferred 32 years of income to heirs through this asset category, or about $1.9 million each. 2,027 estates transferred 8 years of income to heirs through other limited partnerships, or about $475,000 each. 962 estates transferred 20 years of income to heirs through other limited partnerships, or about $1.1 million each. 520 estates transferred 46 years of income to heirs through other limited partnerships, or about $2.7 million each. And 254 estates transferred 243 years of income to heirs through other limited partnerships, or about $14.5 million each. Other non-corporate business assets. Per the IRS, this asset category includes non-farm business assets used in enterprise owned by the decedents, either as a sole proprietor or as a partner in a business partnership. 23.8% of estate tax returns listed other non-corporate business assets with a total value of $6,067,614,000. Other non-corporate business assets accounted for 3.1% of the total estate assets listed, or $1,898,503 on average per estate. If the median income of an American was $60,000 in 2016, the average estate of those 3,196 estates who died with other non-corporate business assets in their possession transferred 32 years of income to heirs through this asset category, or about $1.8 million each. 1,747 estates transferred 10 years of income to heirs through other non-corporate business assets, or about $578,000 each. 781 estates transferred 16 years of income to heirs through other non-corporate business assets, or about $991,000 each. 436 estates transferred 48 years of income to heirs through other non-corporate business assets, or about $2.8 million each. And 232 estates transferred 218 years of income to heirs through other non-corporate business assets, or about $13 million each. Thus, these three more sophisticated asset categories, private equity and hedge funds at 1.5%, other limited partnerships at 3.7%, and non-corporate business assets at 3.1%, totaled 8.3% of total gross estate assets declared on the 2016 estate tax returns. Depletables, intangibles, per the IRS. This asset category is composed of intangible assets, including intellectual property such as copyrights, trademarks, patents, and royalties, and depletable assets such as minerals, trees, oil, and gas, or rights of them. 8.8% of estate tax returns listed depletables, intangibles, assets, the lowest of any category, with a total value of $784,664,000. Depletables, intangibles, assets accounted for 0.4% of total estate assets listed, or $665,534 on average per estate. If the median income of an American was $60,000 in 2016, the average estate of those 1,179 estates who died with depletables, intangibles, assets in their possession transferred 11 years of income to heirs through this asset category, or about $665,000 each. 678 estates transferred 5 years of income to heirs through depletable, intangible assets, or about $278,000 each. 305 estates transferred 10 years of income to heirs through depletables, intangible assets, or $631,000 each. 125 estates transferred 22 years of income to heirs through depletable, intangible assets, or about $1.3 million each. And 71 estates transferred 55 years of income to heirs through depletables, intangibles, assets, or about $3.3 million each. Art, per the IRS, this asset category includes items such as paintings, sculptures, busts, engravings, and etchings. 15.5% of estate tax returns listed art assets, with a total value of $2,154,946,000. Art assets accounted for 1.1% of total estate assets listed, or $1,034,540 on average per estate. If the median income of an American was $60,000 in 2016, the average estate of those 2,083 estates who died with art assets in their possession transferred 17 years of income to heirs through this asset category, or $1 million each. 965 estates transferred 2 years of income to heirs through art assets, or about $142,000 each. 545 estates transferred 5 years of income to heirs through art assets, or about $298,000 each. 367 estates transferred 17 years of income to heirs through art assets, or about $1 million each. And 206 estates transferred 120 years of income to heirs through art assets, or about $7.1 million each. Thus, these two smaller asset categories, depletables, intangibles at 0.4% and art at 1.1%, only accounted for 1.5% of the total gross estate assets declared on 2016 estate tax returns. Farm assets. Per the IRS, this asset category includes the land and assets used in conjunction with a farm or agricultural business, as well as incorporated farms, farm partnerships, and farm sole proprietorships. 14.2% of estate tax returns listed farm assets, with a total value of $7,292,774,000. Farm assets accounted for 3.7% of total estate assets listed, or $3,834,266 on average per estate. If the median income of an American was $60,000 in 2016, the average estate of those 1,902 estates who died with farm assets in their possession transferred 64 years of income to heirs through this asset category, or about $3.8 million each. 1,297 estates transferred 44 years of income to heirs through farm assets, or about $2.6 million each. 417 estates transferred 62 years of income to heirs through farm assets, or about $3.7 million each. 118 estates transferred 106 years of income to heirs through farm assets, or about $6.3 million each. And 71 estates transferred 360 years of income to heirs through farm assets, or about $21.5 million each. Okay, so that took a lot more time and effort to review than I thought it would when I started this process, so I had to split the estate tax return video into 2 parts. In this part 3, we covered assets. In my opinion, after reviewing asset categories, values, and estate exposure rates, the 3 most important asset categories are stocks, real estate, and reserve assets. Inside those categories, the 3 most important asset types are publicly traded stocks, personal residence, and retirement assets. If you own these assets and manage them appropriately, you're probably going to be financially okay. I will say that life insurance is important when your assets are not sufficient to cover surviving spouse or heir needs if something were to happen to you in the accumulation or growth phase, but not so much once your gross assets reach a certain point and you become effectively self-insured. In general, I am not a fan of annuities, whole life, or universal insurance products unless there is a specific need. Less important categories are bonds, private equity and business assets, art and intangibles, and other assets. There is a case for bonds as an asset for shorter term needs and potentially reserved for tactical shifts in asset allocations in portfolios and partnerships for growing wealth. Other assets are more of a result of acquiring property throughout life, and unclassifiable mutual funds a potential red flag if recommended by an advisor. Farm assets are somewhere in the middle, super important if they're your way of life or livelihood, less important to pursue if they're not. I'm going to turn this single image into its own video because there's a lot of important information that will be beneficial to others who have already tuned out, so please look for more commentary in that follow-up video. In part 4 of the estate tax series, I'm going to go over estate allowable deductions, which I believe will be very eye-opening. Subscribe to my channel to track progress as I attempt to solve the national debt crisis. Leave a comment on what you liked or didn't like about this video. Visit watchguardcapital.com and say hello if you have any financial needs I can help with. And until next time, my friend, good luck protecting your assets.